Hello friends, hope you are all doing well. Welcome to Sound Money. I'd like to ask everyone, have you been sleeping well these past few days? Have you felt your heartbeat these last few days? Going up and down, thumping and jumping, just like that silver price chart. Just a moment ago, I took a look at the market. The price of London spot silver is still fluctuating around 92.52 US dollars. This is a new record, never seen before in human history. These past few days, my line has been ding ding, dong dong, ringing non-stop. Lots of friends have been asking me, this silver vehicle is now moving as fast as a high-speed train. Should I close my eyes and jump on? Or should I quickly pack my bags and get off to save my own skin? Some friends even told me that they saw their next door neighbor make enough money from buying silver to buy a car, and they're feeling as anxious as an ant on a hot pan. Don't rush, really, don't rush. In today's video, I am not going to talk to you about those hard to understand Wall Street terms. We're not going to discuss those vague and ethereal theories. I am going to use the most down-to-earth way to completely break down this silver storm of the century, which is even crazier than the one in 1980 for you from beginning to end. This concerns every penny we've worked hard to save. It concerns our future prosperous life. So please be patient and listen to me explain it clearly. All right, let's get started. The atmosphere in the market these past few days can really only be described by the word crazy. Everyone think back a bit. How did all this start? Starting from the end of last year. That is the end of 2025. Wasn't it like silver was on steroids? Just charging up all the way back then. Everyone was still wondering, could it break 70, break 80? And what happened? In the blink of an eye, just after New Year's Day 2026, the price had already left our past perceptions far behind. The data I have on hand tells me, just in these short 3 weeks since the year began, the increase has already exceeded 30%. My dear friends, just think about it. If we put our money in a fixed bank deposit after a whole year, how much interest do we get? At most, a little over 1%, right? But silver went up 30% in less than a month. So it is no wonder everyone's tempted. No wonder everyone's getting anxious. But the market is always a cruel teacher. Just as everyone was cheering, and some were even shouting that silver was going to surge to $150, the market immediately delivered a vicious counterattack. In mid-January, it had just set an all-time high intraday. But only 2 days later, the March delivery futures contract plummeted by more than 4% in a single day. What does that feel like? It is like you are speeding down the highway in a sports car at 200 kilometers per HR. When suddenly you run into a huge traffic jam up ahead, you slam on the brakes all the way. And that inertia makes the seatbelt dig into your chest so hard it hurts. Your soul almost flies out of. A friend told me that day he was staring at the market charts. The teacup in his hand was trembling. It was even more thrilling than riding a roller coaster. But I have to tell everyone in earnest, you absolutely must not just look at the ups and downs of the past few days. And don't let the short-term fluctuations scare you sleepless. When we invest, we look at the trend. We look at the big picture. Let's take a longer view, stretch it out, and look at it from the long river of history. This huge surge in silver prices is very different from the Hunt brothers incident in 1980 that we know of. Some friends might still remember, back in 1980, there were these American oil tycoons, the Hunt brothers, who, relying on their immense financial power, tried to corner the global silver market. Back then, the price of silver was driven up from a few dollars to $50. That was an artificial, malicious speculation, a game where a few people wanted to manipulate the market. Everyone knows how it ended. The rules were changed, the bubble burst in an instant, and countless people lost their fortunes. But this time, it is 2026 now. What is pushing this wave of silver prices up to $90 isn't one or two speculators. Nor is it a few rich big shots. This time, the ones on the buying side, are the world's central banks, national level sovereign wealth funds, and those industrial giants who make solar panels, electric vehicles, and AI servers. This is a collective action by the regular army. It is an inelastic demand backed by fundamentals. So its impact might be longer lasting and more far-reaching than we imagine. This isn't a 100-meter dash. It is a marathon that is changing the global distribution of wealth. We are now standing at a turning point in history. Understanding the situation is more important than acting blindly. We often say, when building a house, the foundation must be stable, so the house won't fall down. In this silver bull market, for the price to reach $90, what kind of foundation is really supporting it? Why do I dare say this time is different from before? I've summed up the 3 thickest, hardest pillars for you all. Once you understand these 3 points, you'll feel grounded and won't just be dancing to the tune of market news. The first pillar, the national teams are entering the market. The big players aren't here to play. In the past, when silver prices rose, it was often just gamblers in the futures, market speculating. This is the key here in 2026. The global situation is turbulent, and monetary credit is getting weaker and weaker. Silver is no longer just a precious metal for making necklaces and tableware. It has been elevated by many countries to the level of a strategic resource. Just like oil and rare earths, it is something essential for a country's industrial development and technological competition, a hard asset you must have in your hands. Data shows that the amount of silver held by central banks globally has increased by almost 40% compared to last year. This is a very astonishing number. What does this mean? It means these big shots who manage the money are all desperately moving silver back into their own vaults. They've smelled something we haven't and are preparing for future uncertainties. Major countries like India and China are all quietly hoarding it. It is not just central banks. Even in Shuibei, Shenzhen, China, everyone knows it is the world's largest gold and jewelry distribution center. The scene there is even crazier. The factories are now lit up 24 hours a day. The machines never stop. Workers are rotating through shifts, working 3 shifts to rush production. But the orders are still backed up for 1 or 2 months. What does this show? It shows that people are really buying. There is real, tangible demand, not just paper wealth. This influx of dual capital from financial giants and the physical industry is like 2 huge torrents merging, making this bull market especially solid. The second pillar, the vitamin of the industrial world, high-tech can't do without it in recent years. Everyone's been talking about green energy and AI, right? You are no strangers to these things. And everyone knows big companies like Intel and Amazon really well. But did well, silver. This high-tech stuff might not even run and could even be paralyzed. Silver has the best electrical conductivity of all metals on Earth, better than copper and better than gold. So in solar panels, it is an indispensable material called photovoltaic silver paste. Those solar panels on your roof that turn sunlight into electricity, they rely on the silver inside. Right now, the whole world is racing to reduce carbon, and every single solar panel has to use it. The International Energy Agency here predicts that by 2030, the solar power industry alone will eat up 150 million ounces of silver every year. What an astonishing number that is. Let's take another look at the electric vehicles on our roads. If you go look on the streets now, aren't there more and more electric vehicles? Teslas, BYDs are running all over the streets. A single electric vehicle uses over 70% more silver than a traditional gasoline car. Because inside an electric vehicle, there is more wiring, more chips, and the battery management system is more complex. And all of these use silver. Data tells us that every 10,000 new energy vehicles consumes over 370 kilograms of silver. Then there are the hottest AI servers right now. Everyone knows that AI needs to compute very fast. So what does it need? It needs the most advanced chips. It needs the fastest transmission speeds. In this situation, only silver can satisfy this extreme need for conductivity. Those precision connectors, high-end packaging, they all need silver. So that is why I am saying silver has been completely transformed now. It is the hard currency of new energy, the vitamin of industry. As long as human technology continues to advance, as long as everyone still wants to use green electricity, drive electric cars, use AI, the consumption of silver will only increase more and more. This is an unstoppable trend. With such huge demand and such rapid industry development, it is hard for the price not to go up. The third pillar, there is really not enough of the stuff. A huge supply-demand gap, okay? So we know the demand is so strong, but what about the supply? People might ask, since silver is so expensive, why don't we just dig a little more? Unfortunately, this is silver's most unique aspect, and also its most fatal problem. The speed of mining simply can't keep up. Here is a bit of trivia you might not know of all the silver in the world. Less than 30% is mined from dedicated silver mines. So where does the remaining 70% plus come from? It is all a byproduct dug up incidentally when mining for copper, lead, zinc, and gold. What does this mean? This means it is very difficult for mining companies to specifically expand production for silver. For example, if copper prices are bad, miners won't dig for copper ore. So the byproduct silver production will naturally decrease no matter how high the silver price is at that time. Moreover, to open a new mine, from exploration, environmental assessment, construction to production, it takes at least 5 to 10 years. This is what they call distant water can't put out a nearby fire. We see from the latest data that the global silver deficit for 2025 has already reached 230 million ounces, which converts to roughly over 6,500 tons. By 2026, which is this year, this deficit is expected to widen to 7,000 or even 8,000 tons. It is like everyone wants to buy a limited edition Herm Phase bag, but the factory only produces so many a year. No matter how much money you offer, there is just no stock. This is the most basic principle of economics. When supply can't meet demand, prices are bound to rise. This isn't speculation, it is a physical shortage. Although the long-term outlook is bullish and the basic supply-demand logic is solid, as a friend who has been rolling around in the market for many years, I must in good conscience remind everyone that 4 very unusual, one might even say bizarre phenomena have appeared in the market now. This means the market trend has entered deep waters, the waves will be especially big, and you need to be extra careful when sailing your boat at this time. You can't be careless. Bizarre phenomenon 1. The volatility is so huge, it is like being on a boat in a hurricane. Have you guys noticed that the price of silver has been jumping around so fast lately? It is dizzying. In the past, a 1% fluctuation in a day was a big deal. But now a single day change of 4% seems to have become commonplace. If you happen to buy in at the high point on that day, your assets would shrink by almost 10% within a day, which is such a painful thing. The reason behind this is the dual amplification from both sentiment and capital, because the market for silver is much smaller than gold. It is commonly known as the poor man's gold. If you throw the same large sum of money into the gold pool, it might only create a small ripple, but throw it into this small pool of silver, and it will flare up like you poured oil on it. Plus, the disagreement between bulls and bears is huge right now. Some are bullish up to $100, $125, feeling that the sky is the limit, while others think it has risen too much and is due for a crash and are desperately shorting it. Neither side is giving in. So with any slight disturbance, the price will fluctuate violently. For us, we really have to be extra careful. Don't stare at the charts all day. It'll make your blood pressure rise. Weird phenomenon number 2. Spot is even more expensive than futures. Everyone is scrambling for the physical stuff. This is a very professional, but also very interesting phenomenon. So please listen carefully, everyone. Generally speaking, because futures include time costs, for example, interest, storage fees, insurance fees, their prices are usually higher than spot prices. This is called a normal market. But now it is the other way around. It is January 2026 now, and the price of spot silver in London is actually higher than the futures contract price. In finance, what does this mean? It is like when you go to the supermarket to buy toilet paper, the shelves are empty, and you are willing to pay a higher price than what the next shipment will cost, just to buy the last pack from the owner's warehouse right now. This shows that everyone is in a hurry to get their hands on the goods. Whether you are a factory owner making solar panels, afraid of running out of materials and shutting down production, or a major investor looking to hedge, afraid you won't be able to buy later. No one wants to wait. They'd rather spend more money to get their hands on silver right now. This shows that the physical silver inventory on the market is really tight. The inventory in London vaults has been continuously flowing out. Everyone is moving silver bars back home or to safer places. And this is a sign that physical is King Strange Phenomenon 3. Silver's big move from London to New York. This is a geoeconomic signal and also the shadow of the great power game. In the past 2 years, hundreds of millions of ounces of silver have been quietly shipped from the vaults in London to the vaults in New York. Why go to such great lengths to cross the Atlantic? Because everyone is worried about trade restrictions, worried about future policy changes. This is just like when we hear a hurricane is coming, and everyone rushes to the supermarket to bring home bread and canned goods. Now, it is countries moving their entire stash. The global supply chain is reorganizing, and Western countries, especially the US, want to keep key resources in their own hands, only feeling safe when they're right under their noses. This has led to a regional imbalance. Over in Asia, the supply of goods might be decreasing because of China's tighter export controls. While in Europe and America, although inventories are increasing, prices also remain high due to speculation by investment funds. This kind of trans-oceanic great migration shows that the market's sense of security about the future is very low, and everyone is building walls and hoarding grain. Weird phenomenon 4, the gold-silver ratio hit a new low. Silver is surging too fast. When we invest in precious metals, we often look at an indicator called the gold-silver ratio, which is the price of gold divided by the price of silver. Simply put, it is how many ounces of silver you can get for 1 ounce of gold. Right now, this ratio has dropped to a new 13-year low. In the past year, silver has soared almost 150%, while gold has risen about 65%. Silver has been outpacing gold by way too much. It has gone from an undervalued asset that everyone ignored to being the center of attention under the spotlight. A large part of this extreme rally is due to everyone's fear of missing out FOMO. Seeing their neighbors making money, seeing it on the news, seeing YouTubers all talking about it, everyone just rushes in, deeply afraid of missing out on this wave. This kind of sentiment is often a sign of an overheating market. We often say, don't go where the crowd is. While that is not entirely right, you definitely need to be more cautious when there is a crowd, because stampedes often happen when it is most crowded. Now that I've shared the good news and why it is rallying, I am going to be the jinx and talk about the risks that you might not want to hear. But for the sake of your wallet, you must know. This concerns your life savings, so you have to listen carefully. Hidden danger 1. Retail investors are too crazy. ETF funds could pull out at any time. We often say it is a double-edged sword. In the past month, the amount of silver bought by retail investors through ETFs has hit a record high as over $9 billion US. This force has pushed the silver price up to $90. But everyone needs to be aware, ETF funds have a characteristic: they come in fast and they leave just as fast. A lot of this money isn't for holding for 10 years. It is looking to make a quick buck, ride a trend, and then get out. Once the tide turns, or there is some bearish news, or the Fed suddenly says it is not cutting rates, these funds will become the biggest selling pressure, running for the exit faster than anyone. When that happens, the physical silver dumped by these ETFs will flood the market like a torrent, crashing the price. What is more interesting is, I looked at the back-end data and found that while most people are buying long, a portion of the smart money has started to quietly buy products that short silver to hedge. This shows that opinions within the market are starting to clash. The big players are retreating while retail investors are charging in, which is usually not a good sign. Hidden danger number 2. Too many people in the options market are betting on a rise in the options market. There are now a lot of contracts betting that silver will rise to $125 or even higher. The volume of these contracts is astonishingly large. While this means everyone is bullish. When everyone sits on one side of the boat can easily capsize. Many of these call options are long shots. And once the price doesn't rise like crazy as expected, these contracts will become worthless paper as time passes. Moreover, historical experience tells us that when the speculative atmosphere is this intense and everyone is unanimously bullish, it is often when the big players are preparing to cut the chives and create a major pullback. Because for the big players to make money, they have to do the opposite of retail investors. When you all buy, who is selling to you? When you all want to sell, who is going to take them off your hands? Now that everyone has already bought in, where is the follow-up? Buying going to come from? This is the hidden worry, hidden danger 3. The price has run too far, like a kite string about to snap. Let's explain this with a little technical analysis. It is very simple. You can understand it without even looking at a chart. The current price of silver has already deviated far from its past average cost. If we look at the 50-day moving average, which is the average price of the past 50 days, the current market price is almost 50% higher than it. This is like flying a kite. If the string is pulled too long and too tight, it will snap. It is also like stretching a rubber band. If you stretch it too far, the force of its snapping back will be huge. In the past few decades of history, this kind of extreme deviation has only happened a few times. Every time this has happened, it is usually followed by a major correction of 15% or even more than 20%, letting the price return to a reasonable range to take a breather. The technical side is already flashing red lights. Although the fundamentals are very good and the long-term outlook is bullish, in the short term, the price really needs a rest. It needs to consolidate. If you chase the high right now and happen to run into this correction, you could be stuck for several months or even half a year, and your mental state will collapse facing a once in a century market like this. I know a lot of friends have some spare cash on hand right now, want to fight inflation, and don't want to watch their money shrink. So what on earth should we do? Should we rush in and grab the money, or be more conservative? I have a few words from the heart, some advice from my friends. First, figure out if you are investing or speculating. These two words are very different. If you are bullish on the future of silver in green energy tech, bullish on its ability to hedge against inflation, then you should be doing long-term investing. The long-term supply and demand gap won't disappear immediately, and the future price floor will indeed slowly rise. You are buying its value, not its price. With this mentality, you don't need to worry too much about short-term ups and downs. But if you just want to make a quick buck on the price difference, seeing it has risen a lot these past 2 days, and wanting to chase it, thinking of selling next week to make a profit, then you are speculating under such high volatility. Speculating is very dangerous. That is a job for professional traders. Regular people like us aren't that quick on our feet and can easily get hurt second. Don't go all in at once, do dollar cost averaging. I've always stressed that for us, protecting your principal is always the #1 priority. Don't see it at $90 and think it'll rise to 150 and then cancel your fixed deposit and bet it all. The best method is to enter the market in batches, which is what we often call dollar cost averaging. Regardless of the price, high or low, you can set it up to buy a little each month or buy a little on the dips. Why do this? Because this way, even if it pulls back, you'll still have funds to buy more at a low point and lower your average cost. Absolutely do not use up all your bullets at once. Keep some cash on hand so you won't panic. With grain in hand, you won't panic in your heart. Only then can you invest for the long run. Third, stay away from leverage. Don't borrow money to buy. This is the most important point. I am going to put 3 exclamation marks here. The volatility is so high right now. If you are using financing, opening a leveraged position, or borrowing money to buy silver with just a 4% pullback, you might get liquidated and forced out without even a chance to recover. We are seeking a prosperous life of abundance, a secure growth of wealth, not gambling our lives away in a casino. At our age, at this stage, we can't afford to lose, and we don't need to take that risk. Physical silver, ETFs, or a bank silver passbook are all fine. Just don't touch futures leverage, don't touch margin trading, unless you are one of the very few professional experts. Fourth, pay attention to physical allocation, buy some peace of mind. Since physical silver is so scarce right now, if you have the extra capacity, allocating some physical silver bars, silver coins, putting them in a safe at home, or renting a bank safe deposit box to store them, that is giving yourself a piece of mind. Although physical silver is more troublesome to buy and sell, not like stocks that you can sell with one click, and you also have to deduct things like minting fees, premiums, it has one biggest advantage. It doesn't have the risk of being force liquidated. No matter how much the price drops, that piece of silver is still there. Not a single gram will be missing. It is an asset that can be passed down through generations and can hold its value. In uncertain times, things you can see and touch are sometimes more reassuring than the numbers on a screen. Hey, my good friends, today we've talked about so much, from the overall big picture to the strange phenomena in the market, and then to risks and strategies. Silver has risen all the way to its current 90-something US dollars. This is indeed an opportunity to make a fortune, but it is also full of temptations and traps. Please remember one thing from me: all assets will take a break after rising too much. There is no market that only goes up and never comes down, and no market that only goes down and never comes up. In this global wild party, we must respect the market and control the risks in our hands. Only then can we move forward steadily through the wind and waves. Other people's fear is our opportunity. Other people's greed is our warning sign. In the next 2 or 3 years, the story of silver isn't over yet. The supply and demand conflict is still there. And the industrial demand, but in the short term, everyone, please be sure to fasten your seatbelts and don't get carried away by the market's madness. The mission of our Sound Money channel is to hope that everyone can protect their own wealth and live a stable, prosperous life in these changing times. Making money is important, but sleeping soundly is even more important. All right, that is it. If you feel that today's in-depth analysis helps you see through the fog of the market and put your mind at ease, please don't forget to give me a like, as this is the greatest encouragement for me. Please also subscribe to our channel and share this video with your friends around you who are also worrying about their retirement funds. We will continue to be here to be the lighthouse on your path to wealth, helping you watch over every storm and surge. No matter how the world changes,